Hello there, my name's George Walker, partner and auctioneer in the Allsop Commercial Auction team. I'd like to welcome you to the second of our 3 podcasts where we're going to take a look at the commercial property market over the last 6 months from the perspective of the auctioneer's rostrum. So in this second session, we're going to look at some of the examples of what's happened in the market over the last 6 months. I'm joined by Jo Seth-Smith from OLIM Property, who has a lot of experience in the auction world and, of course, is now on the other side of the fence at OLIM, and she'll add some tremendous value and a few challenges, hopefully, to what I have to say. So, hi, Jo.
Hello, George.
So I'm going to be covering some of the data from the last 6 months. Where have our investors been getting the yield that they so desperately seek on their, £298 million of sales? So if we break down the transactions, nearly £300 million, 2/3, 68% of what's been selling in our auction room is in the retail sector. Clearly that's broken down to retail high street, convenience store, out of town. The alternative sector, which is the sort of car parks, the car showrooms, the non-conventional, has risen from about 27 million to 31 million. So it's about 11% of what we sell. The biggest shift in the last 6 months or so has been in offices. I think our investors are looking for a bit of a high yield, but looking to spread their risk away into another sector on the office market, and that's risen from just under 4% to now it's 12% of what we sell. And there's some nice examples in that, and we'll cover those later on. Industrials are one area that really, we know the market's red hot for industrials, which is probably why they don't come to the auctioneers to get it sold. about 10 million pounds of sales, and there's no doubt we could sell any amount of industrials that we've proven over the years, but perhaps the market's a bit very liquid for that and they don't need auctioneers, which is a shame. Geographic analysis, we have that the national coverage which we so enjoy, and it really, if you look at year on year, we cover the national market. We always dig out the local buyers. Just over 57% of our buyers are very local. And whether that be in the northwest or northeast, it changes year on year. About half of what we sell is in London and the southeast by value. And the northeast has had a bit of a resurgence this year. The northwest has gone down a bit, but it always stays about half inside London and the southeast, which is so important if you're trying to harness that national buyer and pit him against the local buyer to get the best price. So looking at a couple of those examples then, if we look at the sectors, Jo, I've got a few examples in the review, and if we were to look at the offices, we've got a very big piece of Wolverhampton, 42,000 square feet. I mean, clearly, when the PDR market was absolutely racing, people were buying these office buildings. I'm not sure the PDR numbers stack up in Wolverhampton, but at 9% with some good tenants, you'd think there's a bit of return.
You would do, yes. I think it's interesting to see from your review that there has been such a leap into offices from the private investor. Now, I don't know the ins and outs of it. I'm sort of guessing that with all the permitted development and the change of use from offices to residential, particularly in the town centres, there hasn't been too much new development of offices of late, and that probably played its part.
Yeah, I think you're right. So take up in converting to residential has reduced the supply.
Exactly.
And you've got the old economics of supply and demand.
Exactly. But it's not for the faint-hearted offices. I mean, even in, whether it's a private investor looking at an office block or whether it's a fund, at the end of the day, the leases you're getting aren't really more than 5 years these days. I think
you're a 25-year lease junkie, Jo.
Well,
other people out there will take these risks.
Isn't it? It's a disease. But the problem is it's down to money, and it's down to the amount of money you have to spend on an office. There is a lot of upkeep.
And it's expertise.
I don't think it is for everybody, and I think a lot of the time you can get quite easily swayed by the fact that, if it doesn't work out, I'll just convert it straight to resi. Well, actually, that doesn't always work out.
But if you look at the London School of Economics building in London NW1.
Yes.
Now, wasn't that just a dream instruction? Nice piece in Marylebone. The buyer bid once. He let all the auction room at sort of £2.5 million guide have fun. Everyone had a bid. And when he was ready, he stuck his hand up. At 3.17 million, our friend paid 3.8%. But it's St John's Wood. So everything there is about diversifying risks.
Yeah.
You've got London School of Economics, who aren't going anywhere.
No.
And you can see the alternative use. You can see why you'd buy that at a bond yield.
Yes.
Yeah.
I see no issue with that at all, frankly.
Might you be persuaded?
No.
I don't like offices. I don't like offices, do you? So these shopping centre sales, I mean, wow, we've done 7 this year from Bangor and Rotherham.
Not an obvious auction sale, some might say. Shopping
Not
centres.
an obvious auction sale, is it?
No, but clearly it does in fact work, and certainty in an uncertain market is what auctions is all about.
I think it is. And I think in the one we saw most recently in Bangor, that the holding company made quite a substantial profit on development site. So they were struggling to keep this building let. And they took the decision and priced it very sensibly. And as I said, 3 times the reserve. I think 87 people, and I think most of them were bidding on the day. It shows you what can be done, kind of.
I think absolutely, and particularly in a market like this, you do not overprice product that's particularly in that sector.
Yeah, I think you're absolutely right. And that was a joyous result.
Well, I suspect you'll see a few more shopping centres coming your way.
High street retail was a great example of that Boots. I mean, Boots is one of those covenants that people just rely on.
Look, I mean, Boots have done a very good. They obviously get that portfolio that's been dealt with and being sold through. Clearly, they are making moves to deal with some liabilities, shall we say, along the way. But look, Boots is one of those brands that private investors has always felt comfortable with. Chemists, actually, you remember the Lloyd's sale and leasebacks, God knows how
That's a long time ago. Yeah.
And they're usually in very strong positions on the high street necessarily. They're usually quite centrally located.
The old Woolworths spot.
Yeah.
We do sound old.
I know. Shocking.
I wonder whether the sort of the prescriptions that they are kind of locked into is a bit like the click and the collect. I mean, actually, people have a reason to go into the store, don't they? To go and get their repeat prescriptions from Boots.
Well, at the end of the day, when you're talking about the high street, you've got to think about what you can or cannot buy online at the moment, and more importantly, what you don't want to buy online at the moment. Now, whether that's prescriptions, whether that's formula for your children or whatever it is, chemists have always delivered on the high street.
We've got to talk about there's a Hinckley Specsavers, which I glibly make a comment in the review. One swallow doesn't make a summer, but 4.5% for a high street asset. That was a rather nice point in the sale in March rather.
Gosh, March, yeah, that's pretty impressive, I have to say.
Where was
it again? Hinckley.
But there we are. That the Hinckley is if you understand the private treaty market or private investor market, the population of Hinckley, Leicestershire, they love the property. And
yeah.
You can't get them off the drug sometimes.
No.
But Specsavers, it's going to get down okay. So, alternatives we covered earlier when we chatted. Car showrooms, Mercedes dealership, car park. Car park is a car park. It probably does just give you that development angle. A long lease gives you a fixed increases. It's going to appeal, isn't it?
Yeah, absolutely. I mean, we were talking about this earlier. I think that there are lots of car parks, or have been lots of car parks on the market, whether that's in auctions or private treaty, and they do tend to sit in 2 camps. One is a sort of open plan, nothing above it, by stations, etc., and then there's the other sort of multi-storey car parks and all the rest of it. Now, if it were me, I would be going for something that doesn't have lots of things above it, because frankly, you want that alternative use value. Like I said, it's all very well to have the long lease and the covenant, and people can look at the covenants in different ways, but actually you want something to fall back on. And I think that's why they've gone quite well, and in particular in the auction market, because frankly, private investors don't see as much of the product as, the likes of funds or property companies or people who have, real property experience or have been doing this for donkey's years They don't necessarily see that, and I think that absolutely drives the pricing in the room. Frankly.
Yeah, so you buy the footprint and the airspace.
Yeah.
Happy days, like
Thank
a shop
you very
wrappers,
much.
isn't it?
Yeah,
absolutely right. You can see that. Excellent. And industrials, industrials is always alternative use. It's been the sector of heavy growth, hasn't it?
It has been.
I think that we'd love to see some more of that, but we just haven't seen those.
I think it's a crying shame that the auction market hasn't seen enough of them, actually.
English partnerships, we must have done 200-300 million for them back in the day, but they've all been buried, which is fine. So looking at the bigger lots, we've had a fantastic year for the bigger lot sizes, and some people, I think, sort of question, 78 lots over £1 million. That's quite a lot of dollars. Biggest one, Covent Garden, 12.4 million. Are we going to beat that again this year, Jo, do you think?
Is this the Lady?
The Lady magazine.
The Lady. What ladies do. I suspect not, George, if I'm being completely honest. I mean, that was a peach of an instruction.
Wasn't
but
it? Yeah.
I mean, that ticked all the boxes. The press, the location,
Bit of
history,
controversy.
Yeah, the full shebang.
Boris Johnson's sister involved.
Yes, I mean...
Daily Mail.
Daily Mail. I mean, who doesn't love a bit of Daily Mail, frankly? Yeah, so I think lot size and auctions, a lot of people will particularly funds actually, will turn around and say, well, at that lot size, it is not private investor territory, therefore it is not an auction lot.
Yeah.
I don't actually stand by that necessarily. I suppose, coming from my experiences in auctions as it is, why would I? But I mean, it's more product, isn't it? And demand. It's not actually the lot size that's driving. I mean, there are a lot of cash-rich investors out there, and lucky them, frankly.
I mean, it's interesting because the buyer was a listed propco, but on the underbid, it was a private family office. Overseas family office. They just fancied it. But it's got everything you need, a great lump of residential, a great postcode, a bit of history in Covent Garden, which every overseas investor is going to want to have a go at, which is interesting. The other example we cite in Lloyds Bank, Camden High Street, got 4 flats above it, bit of airspace. Again, you can see why an investor would have a go at that. 4.5%, £6 million, but it's just got longevity, long-term value. I know it hasn't got a 25-year lease, Joe. We can't have everything.
Well, disappointing, frankly.
But it's got a great postcode, hasn't it? I think one of the surprises was the sales we've done for NatWest. We have, I don't know, a dozen instructions, but we got £3 million for the vacant one in Earls Court Road. Again, it hasn't got the upper floors, but it's a very busy part of London, and you can see people having their own use for it.
Yeah. I mean, £3 million for a vacant bank in Earls Court. I mean, it's not everyone's cup of tea, is it, frankly?
But the buyer's delighted. The great thing is, a lot of these assets that have been let and occupied by a proper tenant are brilliantly maintained. So you're not going to have anything leaking or dripping. It's all going to be in good nick, which was a heck of a good start, isn't it?
Yeah.
Brilliant. And I think the sort of most famous favourite asset, was it? Do I have a favourite asset? I'm not that soft. Iceland in Caledonia Road, a couple of flats. Someone was there at 3.5%. I wrote about this actually in the States Gazette, having a little bit of a guess, and said that it is slightly private investor haven. It's a tenant. Iceland is something people trust.
They do.
It's been through the hoops 10 years ago. It's come back. It's giving a value product to the market.
Well, Richard Walker is obviously very much a big part there now, and he's very much pushing for being more eco-friendly, getting rid of packaging on things. He's definitely a public face, and I think people feel confident in him and the brand, and that there is a succession happening there, and I think that makes a big difference.
It's a Walker dynasty, not my Walker dynasty, but it's a Walker dynasty, and we know we can trust these things.
Yes.
But it's interesting, isn't it? A family company, almost, and people trust it, and it delivers profits year on year. Whether they'll ever get the development angle and get Iceland out, I'm not sure, but it was a good investment for someone, and he was very pleased because he wrote to me as a result. So that sums up a lot of what's happened in the last 6 months. Jo, thanks for whizzing through some examples. If you download the review, there's a lot more on our website, allsop.co.uk. Find me on Twitter at #AlsoGeorge and george.walker@allsop.co.uk. We've got one final episode which is going to look forward for the next 6 months. So again, come back to our website, have a look at that, or I just simply look forward to hearing from you.